Welcome back to Investing Talk Podcast. Today we're taking a close look at Microbot Medical and really digging into that question many of you are asking, is Microbot Medical a good time to buy now? Before we get started, if you find what we discuss valuable, please take a second to subscribe, maybe like the episode, and leave us a comment. Oh, and definitely let us know in the comments if there's another company you'd like us to explore. We've got a range of sources here, financials, recent news, analyst takes, trying to piece together the full picture for you. Our aim today is to really understand what's happening with Microbot Medical, especially now they're moving from, well, the clinical hope stage towards actually selling their product.
Right, and it's crucial to understand where they were coming from until really quite recently. For a long time, Microbot Medical was, the classic pre-commercial clinical stage medical device company. Their main thing, the Liberty endovascular robotic surgical system, was still in development, going through trials.
So no actual sale at that point?
Yeah, none. As of June 30, 2025, completely pre-revenue, zero commercial sales. And that phase, well, it means spending a lot of money. For Microbot, it added up to an accumulated deficit of $97 million.
Wow, $97 million. That's basically the total net loss since they started.
Exactly. It shows how much investment this takes. They lost $3.5 million just in Q2 of 2025 and $6.1 million in the first half of that year.
So definitely not competing head-to-head with the giants like Intuitive Surgical or Siemens Healthineers back then.
Oh, not commercially, no. They were focused purely on development and getting that regulatory approval.
Okay, that sets the scene perfectly. Because what happened next was, well, a really big deal, the kind of news these companies live for. In September 2025, Microbot announced they got FDA 510K clearance for Liberty. Now, 510K, that's the pathway for devices similar to ones already on the market, right? Often a bit faster.
Correct. It's not the full PMA, but it's still a major validation and absolutely key for market entry. And what makes this specific clearance so significant, so groundbreaking even, is that Liberty is the first remotely operated system designed for these peripheral endovascular procedures.
First remotely operated. Okay, that sounds important. What does that actually mean in practice?
Well, think about it. It could change how surgeons work.
Yeah.
Less fatigue, maybe. Specialists operating from miles away.
Ah, so potentially improving access in remote areas too.
Potentially, yes. It's not just a new gadget. It could represent a whole new way of doing these procedures. It's a huge differentiator in a crowded robotics field.
Right. That first remotely operated part really stands out.
It absolutely does. And this clearance, it's the signal, the green light, for them to actually start selling in the U.S. They're targeting Q4 2025.
And the market reaction. I imagine that was pretty dramatic.
Oh, it was. The stock jumped 9.3% on September 8th. Huge excitement.
Up there.
Then it dropped back over 15% the very next day. Classic profit taking.
So volatility is the name of the game here.
Definitely. It shows both the perceived potential and, how quickly traders can move in and out of these kinds of stocks based on news events. It's that whole buy the rumor, sell the news idea playing out.
Makes total sense given their journey. So FDA clearance in hand, commercialization planned. How are they looking financially now? Can they actually fund this launch? It must cost a fortune.
That's the million-dollar question, or rather the multi-million-dollar question. And it looks like they were preparing for it. They did a capital raise back in August 2025, brought in $4.75 million from selling common stock.
Okay, so some fresh cash right before the big news.
Exactly. It boosted their liquidity at just the right time. And their current ratio reported in August was, get this, 12.1.
12.1. Isn't like 2.0 considered pretty healthy?
It is. So 12.1 is incredibly strong. It suggests they have a lot of short-term assets compared to liabilities, crucial for funding a launch.
So management feels okay about their cash runway.
They've stated that their cash on hand, which was around $32.7 million at the end of June, plus these recent raises, should be enough to fund operations for over a year.
That's a decent cushion.
It is. But, and this is important, they are still losing money on operations negative net operating income. That's expected pre-revenue, but the pressure is definitely on for successful launch now.
Okay, so the pieces are starting to come together. Regulatory approval, decent cash position. But the real test is execution, right?
Right.
How do they plan to get Liberty adopted?
Yeah, having a great product isn't enough. Their plan seems to involve a broad commercial rollout and actively seeking strategic partnerships.
And the market size? Is it big enough to make a difference?
Oh, yeah. They're targeting a market of about 2.5 million procedures annually just in the U.S. That's huge.
2.5 million. Okay.
Even capturing a small slice of that could be significant revenue. Plus, that pivotal study that backed the FDA clearance showed a 100% success rate.
That's got to help sales conversations.
You'd think so. Strong clinical data is compelling, and they were already setting up the commercial side sales, marketing, distribution teams back in July, getting ready for this Q4 launch.
Okay, so things are moving fast. For anyone watching this stock, what are the key dates or events coming up, like in the next 3 months or so?
It's actually a pretty packed schedule investors should watch for. Let's see, September 25th, there's an H.C. Wainwright investor update. Could get some details there.
Okay.
Then October 21st is the Q3 earnings release.
Oh.
That'll be key for seeing spending on commercialization, capital deployment, maybe any super early revenue hints.
And institutional buying.
Right, around October 31st, we'll see updates on institutional holdings and ETF rebalancing. That can affect liquidity and volume, especially for a smaller stock.
And the launch itself.
The big one, November 15th, is the expected U.S. commercial launch date for Liberty. That's really the inflection point. And then, by maybe December 20th, we might start seeing some initial data on procedures, adoption, how well it's actually being picked up over the holidays. That initial feedback is critical for judging scalability.
That calendar is definitely full of potential catalysts. What about the stock chart itself? How has it been behaving, and could this news change the technical picture?
Well, historically, it's been very volatile, as you'd expect for a company like this. We've seen support buying interest kick in around the $1.30 to $1.60 range, and resistance, selling pressure, tends to appear near $2.25 to $2.50.
And the moving averages, were they showing a trend?
Yeah, before this news, the 50-day and 200-day averages were both trending down, indicating, a downtrend.
But the FDA news could flip that.
Absolutely. This is exactly the kind of fundamental news that can totally change the technicals. We could see those averages turn up, maybe even a bullish crossover, if the market truly believes in the commercial story now.
Interesting. So the charts might be telling a news story soon. What about rumors or speculation? Anything else floating around that could impact things?
Oh, there's always chatter with innovative tech like this. One persistent rumor is about a potential acquisition.
By a bigger player.
Exactly. A major medtech company might see Liberty as a quick way to get into this specific robotic space, especially now it's FDA cleared. Saves them years of R&D.
Makes sense. Anything else?
There's talk about potential international approvals, maybe EU or Asia. That would obviously open up huge new markets.
Right.
Also, speculation about using the Liberty system for other types of procedures, beyond peripheral ones, expanding its use case.
Okay.
And maybe even technology licensing deals, letting other companies use their tech. Any of those, if they happen, could be major drivers.
Lots of potential upside drivers then. But we have to talk risks. Even with FDA clearance, this isn't a sure thing, right? What are the main hurdles still?
Absolutely not a sure thing. The risks are still significant, just different now. First, they're still losing money. Cash burn is real until revenue ramps up significantly, and that's a big if.
So profitability is still a ways off?
Likely, yes. And success hinges entirely on commercial adoption. Getting doctors and hospitals to actually buy and use Liberty is the key challenge now, not regulation. Competition, training, hospital budgets, all hurdles.
And you mentioned operational risks.
Yes, their base in Israel introduces some geopolitical and operational risks, potential supply chain or manufacturing disruptions. That's a factor. And don't forget dilution risk. They might need to sell more stock down the line to fund growth, which can hurt existing shareholders.
Plus the general risks of the medical device sector.
Right. Tech changes fast. New competitors emerge. Regulatory goalposts can shift even post-market. Shifting to commercialization just swaps one set of risks for another, really focusing on that unpredictable market uptake.
Okay, let's try to wrap this up into a clear picture for you listening. We started with Microbot as a high-risk clinical company. Now they have FDA clearance. How does that change the investment thesis?
It changes significantly. Our previous view was, yes, high-risk clinical stage, no revenue, losses, dilution, pretty standard for that phase. Now, they transitioned to a high-risk commercialization stage company. That's the key shift.
Still high risk, but for different reasons.
Precisely. The negatives are still there. The execution risk in the market is huge. Competing is tough. Cash burn continues. Profitability isn't guaranteed just because the device is cleared.
The positives.
The positives are real now, too. They do have near-term funding, a genuinely innovative product with that first remotely operated angle, and they're entering a massive market. That FDA clearance is a massive de-risking event on the regulatory front.
So the bottom line for someone considering an investment.
For most long-term investors, it's probably still too risky. Not suitable for long-term investment feels appropriate given the commercial uncertainties. However, for traders comfortable with high risk, focused on specific events, it may be of speculative interest for short-term trading.
Focusing on those catalysts we talked about, launch date, early sales data, partnerships.
Exactly. Those are the things that event-driven traders will be watching very closely.
All right, so as Microbot Medical makes this critical shift from getting approval to actually trying to sell their system, here's something to think about. How will their journey illustrate that tricky balance between having really cool, groundbreaking technology and the tough reality of making it stick in the market? And maybe more broadly, what does their story tell you about innovation, market adoption, and just how challenging the road is in the world of robotic surgery?